Welcome back, ladies and gentlemen. My name is Joshua Castillo. Thank you so much for joining me here today. Today, I'm really excited because, as the quarter had already ended, it's been it's almost been a month, 2 months. It's almost been 2 months now. But as the quarter ended, 45 days after that quarter ends, the people have to give, and by people, I mean hedge fund managers and different funds that have to put out this filing. They have to put out what they call a 13F, which basically means that we get to take a deep dive, or really just a little peer through in a glass into their portfolios, in their US based portfolios, and really it's just the stocks that they hold. And if they hold any options, we also get to see those put or call contracts as well. So I'm really excited. I'm going to take a look at some of the super investors today. There are some that I want to go deeper into, and I might do that in a separate video, but today we're just going to take a quick look at some of the different moves or lack of moves that a lot of these super investors are making. Again, I'm a value investor. My name is Joshua Castillo. If it's your first time seeing me, make sure to subscribe, hit the like down below. Let's dive right into this. So what I've prepared for you today, and again, changing angles because this is the only way you can do this, we're going to be taking a look at the 13Fs for Q3 2022, and really the most important thing, and really what you can get in out of all of this, is how important it is to kind of look at this. But again, this is not the full picture, and I'll kind of walk through as we go through each one. So opening up first, Lilu from Himalaya Capital Management. Now, again, some of these people don't make any moves. So if I don't see anything, I just put whatever the latest activity was, in this case, Q2 2022, where Lilu got rid of Meta and added to his Google. Now, again, this is his portfolio in the US, not his entire portfolio. He owns a lot of companies outside of the US, and that's something important to note because I think a lot of people don't pay attention to that. But this is just his US portfolio. I know that he owns some other companies like Pinduoduo, is a Chinese company, and he has a lot of management that operates in different countries. So not really surprising though, but just so you can see it, this is exactly what's on his US-based portfolio, not any moves made in Q3 2022. Michael Burry. Now, this is one of the most important things that I think a lot of people try to pay attention to. They try to see, what is Michael Burry up to? What is he actually doing? What are the moves he's making? And he had Geo going into Q2, or he kept Geo rather. He kept Geo going into Q2 2022. He added more to that position, as you can see there, as well as he added a couple other positions that I wanted to touch on. I actually have notes too, because I don't know about all these different companies. So Geo is a private prison that owns a lot of facilities and lands across the United States, along with CoreCivic, again, is another prison sort of rehabilitation play. I'm not really sure what his inspiration was for all of this, but he's very heavy into prisons, and he's been trading in and out of Geo as well as CoreCivic, I believe. So not really surprising there. Now, Curate Retail Group, they're the people that own Zulily, and essentially own Zulily and QVC. So, Zulily's more focused on the younger mothers, and then QVC is just, they sell to everyone. They sell to everyone. Aerojet Rocketdyne Holdings, so that's going to be an aerospace defense company. It was a takeover play for Lockheed Martin. It fell through because FTC stepped in. And so now what I've been seeing is they think that Howmet Aerospace might get involved because Elliott Capital Management actually owns a position now in both companies, Howmet and Aerojet. So we'll see where this actually all pans out, but it's interesting to see. But that's pretty much from this that I wanted to touch on. So moving on, Mohnish Pabrai, obviously, again, one of those people that you can see his portfolio value is only 98 million in the US. I think he has close to 800, almost $1 billion in assets under management. It might be pretty close there now. But essentially, he switched in a not too recent time. He switched from investing into American companies into investing into Turkey, India, and a bunch of other Southeast Asia places. So it's not really that surprising to see him only have $98 million in his portfolio. And along with that comes with the fact that he really doesn't make any moves. He's really not that active, but in this quarter, surprisingly, he added BAM, or BAM, Brookfield Asset Management Inc. He really likes the CEO. He likes the management across the board. And the other thing that I found was that there is sort of a catalyst / breakup. They're going to split the business, and it's supposed to help the capital on both sides. Justin from J Money did a great video on this. But I think that it could create an opportunity. And one of the things that they noted in their investor presentation was that they could see their company going for $150 to $175 in 2027. So 5 years, give or take 16 CAGR, so compounded annual growth rate. It could be an opportunity if that's, all pans out correctly. And I think that's what Mohnish sees here, along with the fact that, again, he likes the management. He knows the management. He also knows a lot of other people that are in this as well. So not really too surprising there, but it's something that I wanted to mention because, again, he doesn't really make that many moves. So it's interesting to see him make this move today. Seth Klarman, now he runs Baupost Group. There's a ton of different companies. I think they had like 50 stocks, give or take. 44 is what they've moved down to, but it used to be around 50. So I'm not going to go through each, reduction or sell or whatever. I'm just going to kind of go through the ones that I think they're important. First things first, his biggest ad was Warner Brothers Discovery. Again, this has been a split from AT&T. Warner Brothers left AT&T to go and merge with Discovery, and they have been sort of going through the ocean as a public company post merger. It's not been a full year yet, so not really anything surprising. They do need to get their free cash flow up. They do need to get their earnings up. They're trying to roll out this Discovery Plus and Warner Brothers and HBO Max and things like that. So you're going to see some, costs come from that and just general merger costs and things and synergies and all that as they come through. I do own Warner Bros. Discovery. I like the company. I like the management. Again, I think because we're seeing a lot more companies enter this sort of streaming area, it could get a little harder for them to price people correctly, but we'll have to see what all shakes out. Gray Television, now they own in about 113 different markets. They have some of the top channels in 80 of those markets. And they have a lot of different networks that they show TV news and ads on. So it's really interesting to see how many people are kind of like getting into the different television plays or cable plays or streaming plays, because it seems like a lot of the different companies that are coming in this all got marked down a lot over the last 12 months, 14 months. So it's interesting to see. I'd honestly never heard of Gray Television until looking and preparing for this presentation. So I was really excited to see that one. It looks pretty good. And obviously, Seth Klarman's buying. It might raise some green flags for you to go and take a look, see if that's something that fits your portfolio. Now, WTW, that's going to be Willis Towers Watson. I had to look this one up because, again, I had no idea what in the world this was. But basically what it is it's a company that offers like pension and financial planning for companies. So sort of like the HR portion of the benefits and things like that is really what they add and what they help people with and what they help companies with. Then along with that, SSNC. So again, some of these companies I've never heard of, so that's why I'm going to kind of touch on them a little bit more. But SSNC, so they actually make financial software for hedge funds. And it's, from what I understand, it's a pretty key financial software for these hedge funds to properly do their accounting, properly do their management portfolio and all that thing. So it's interesting to see, like, you watch Seth Klarman, you watch Warren Buffett, you watch these investors kind of pick things that people have to have. If someone buys this technology, it's almost like Adobe. If someone buys the technology, there's not really anything else around it. If they're already using it, they don't want to really switch from it. They'll just pay whatever the increase is in costs, and that's what they'll do. So it's interesting to see how other investors find this. Micron Technologies, again, another one of those, everyone has memory. Whether you're building a car, whether you're building a computer, a phone, whatever you're building, even this camera, this SD card uses memory. Everyone has memory. So when you get into this company where there's only three, so there's SK, there's Samsung, and there's Micron, you can't go anywhere else beyond that. And it's a lot of really CapEx just to get to their position, let alone try to beat them and get beyond that. It's a lot of learning and experience and things like that. So it's interesting to see Seth Klarman sort of move into these companies more and more and add to his positions more and more as we've seen the quarter kind of roll on. So it's interesting to see that. The other thing I wanted to note was some of the sells that he had. So Amazon, he reduced by 58%. Google, he reduced by 59%. Intel, he completely sold out of. Nexstar, he completely sold out of. I can't say anything bad about these companies. I can't say anything like, oh my God, I don't know why he would do that. I think a lot of it has to do with what he sees and, the positioning of the portfolio. And you have to also think, again, going back to what I mentioned earlier, when they buy into these companies, especially something like Seth Klarman, they may have a short, they may have a hedge, they may have something off the 13F filing that is going to keep them safe no matter if it goes up or goes down. So a lot of times, again, with these hedge funds, they're going to have things on their books that aren't necessarily being shown in 13F, but they have it on their books like a bond or a warrant or a contract or something that's basically going to hedge them so that way they don't lose a lot of money if this ends up going down. If it ends up going up, awesome. If it doesn't, they'll just sell off. And I think that some of these probably had some hedges against them. So not really too surprising there. It's interesting to see 44 stocks, $5.6 billion portfolio. I don't think that's all of his portfolio, but interesting nonetheless. Again, Warren Buffett, another person who is making some moves. Again, Berkshire Hathaway it's not just Warren making all these moves. There's also Ted, Todd, and some of the other people that work at Berkshire Hathaway or are a subsidiary that basically it gets represented on Berkshire Hathaway's books. So, if Todd or Ted buy a company, it's going to show up under Berkshire Hathaway, and of course, it says Warren Buffett, but that's because that's super investor. But one thing I wanted to add, so Occidental Petroleum, that's been their big ad. They've been just like plowing billions of dollars into, just really over the last 3 or 4 quarters. They did have some convertibles, from what I understand, in 2020. They converted it, sold the shares, and now they're back in Oxy. Oxy's been paying down their debt. They've been benefiting a lot from these high oil prices, and they've been using that cash flow to actually pay down debt and to continue to put themselves in a better financial position, which is always great to see, and I think that's what the Berkshire Hathaway team sees as well. Paramount, obviously Paramount Plus, you have Paramount, the company, like similar to Warner Bros. Discovery, you have Paramount, the company, and then you also have Paramount Plus as the kind of their new catalyst going forward. So similar to Warner Brothers and Discovery, and as well as Netflix and Disney Plus, we're gonna have to see where these kind of all land. It all kind of depends on, what the catalog of TV is and what people continue to watch, and if trends change, what that actually looks like. From what I understand, Paramount did have around a 5% dividend, so that could play into it just a little bit. RH, so RH makes a bunch of home furnishings. If you've never seen RH, go to rh.com and just take a look. It's a lot of home furnishings. It's interesting to see them add now. I'm not sure if which manager inside Berkshire Hathaway added it, but it's not a huge position. Only 190,000 shares, and I say only as if that's not a lot of money, but only 190,000 shares. It'll be interesting to see if they decide to add to this more, if real estate ticks down even further. It has been a little shaky, so I think there's some of that in there. The other thing I wanted to add, TSMC or TSM, Taiwan Semiconductor has been sort of the big push, I guess, for a lot of people. And to see it end up on Berkshire Hathaway is kind of crazy because, I don't think Warren made this buy. I would imagine it was Ted or Todd that made this buy. But again, going back to what I was saying, Warren Buffett and Berkshire Hathaway own a ton of Apple. Who makes Apple's chips? Taiwan Semiconductors. Who makes most of the chips in the world? It's Taiwan Semiconductors. These companies tend to buy like the leaders in each field, especially as they get a little bit cheaper. And again, Warren always says it's better to buy a good business at a fair price than a great business at a wonderful price or something like that. So, he sees it. Not really surprising there. Louisiana Pacific Corp was another one that I had never seen before. So I wanted to kind of take a look at it. And really what it is it manufactures and markets building products. So, construction materials, different sorts of things for indoors and outdoors, and a lot of just different structural things for houses. And then US Bank Corp was kind of surprising to see them drop, as well as Kroger. And then Activision Blizzard, I believe that was Todd and Ted, but I wouldn't be surprised because Warren had bought some after they had, originally back in Q1 2021 when that merger got announced. So I wouldn't be surprised if some of that reduction was Warren selling out Activision Blizzard, buying a little bit of Oxy and using that money towards Oxy because, he sees it as a workout, but I think if he sees a better opportunity, he's going to continue to plow money into that. Guy Spier, Aquamarine Capital, never makes a move. Last quarter he sold off Twitter, and that was only because of Twitter getting bought by Elon. As soon as that news got announced, he sold off. At least that's what he said. No other moves here. He owns a ton of Berkshire. He owns a ton of different, stable companies that I think will do well over the long term. It's interesting to see, he just doesn't make a move. He has Baba, he has DJCO, he has Google, he has Seritage. just doesn't make a move, just sits on it and just waits. And I think that a lot of people can take notes from this, and I think that um, this sort of Zen way of investing is probably the best way. And I love listening to Guy Spier. I love hearing what he says. So, to not see any moves, not really that surprising. Now, this was one I was more surprised about was Bill Ackman, seeing how active Pershing Square Capital was and seeing some of the ads that they had. So the first thing that they had was Canadian Pacific Railway. It is, I think it's the second or third largest railway in Canada. It's 13,000 miles worth of track. I think Canada National had, or CN is the ticker, I think it's Canada National, had 20,000 miles worth of track, so not too far off. But again, once you buy these railways, there's not really you can't just keep adding tracks. You kind of run out of space and it becomes not worth it. So to buy into this company, I did look at the ratios and things like that, and I didn't see it. It was everything was pretty high, PE wise, price of sales wise, anything like that was pretty high, relatively speaking. To buy 417% or add 417%, it's kind of surprising, but Bill Ackman probably has something else on the books that we don't see here on the 13F. The other thing is Lowe's. Lowe's is, again, construction, similar to Home Depot. They sell construction supplies. They sell different home supplies, home building, and things like that, and renovations. So not really that surprising. Again, stable business. Again, if it keeps going lower, he'll probably continue to add. It's about 25% of his portfolio. So obviously, if it keeps dropping, he'll keep adding. The other one, Restaurant Brands International. He seems to like the sort of restaurant style companies and things that he can add. Again, it's 16% of his US 13F filing portfolio, and he continues to add to that. Hilton, not surprising at all either. He loves sort of this not financing. He loves this franchising / licensing that happens with Hilton, and being able to use that and kind of, you own the name brand essentially, and being able to invest into this. And then lastly, he got rid of Domino's Pizza, and the reason he got rid of Domino's because he thinks it's too overvalued, and he sees, going forward, it's highly valued going into a not so good situation for the consumer. So with that being said, he decided to sell off. Not really that surprising. He rode this one for a long time. He had it in his portfolio all throughout pandemic and things like that. So people needed pizza. People always bought pizza, but if you're in a fairly valued or highly valued company and you think that the market's going to go down or just consumers can stop buying pizza, probably want to sell off and keep the profits and be able to put that money into something else. Charlie Munger, I talked about this when I did my DJCO video. Didn't make any moves. The last move that they actually made on the portfolio side was they reduced their BABA by half in Q1 of 2022. But other than that, there's been no moves in the last 6 months, and it's not really surprising that when the quarter ends, Daily Journal basically puts out their portfolio. There's not really a lag in between. So that's something that I wanted to note. And then pretty much that's it. That's all I got for you today. So thank you for staying tuned. I'm hoping I can do a little bit more of this and use my computer a little bit more. I don't always get to use it because it's kind of a weird setup if you can't tell. But thank you all for watching. Thank you so much for joining the video. I hope you liked what you saw. Let me know if you have comments down below on any tickers that we've gone over today, or if you're looking into anything, let me know down below what you're looking at, or if you think you want my opinion on something, put it down there as well. I hope you have a great day. Happy investing. Thank you.